I was just about to release my interest rate predictions, but then everything changed. ANZ started saying that interest rates would go up and wholesale interest rates spiked. And now there are articles in Stuff, The Herald, and almost every major newspaper in New Zealand talking about how interest rates could potentially go up again. I've waded through the latest data to create updated interest rate forecasts, so make sure you stick around to the end of this video to see them. I'm Ed, an economist here at Opes Partners, and this is Property Now. 2 weeks ago, ANZ, New Zealand's largest bank, thought that interest rates would fall pretty quickly actually throughout 2024. They expected that rates would fall from 7.4% all the way down to 5.9% for the 1 year rate. That's a fall of 1.5% over the next 12 months. And on a $500,000 mortgage, you could be saving $115 a week in your mortgage repayments. And there was a lot of data that supported that forecast a couple of weeks back. You see, the wholesale interest rate had fallen from about 6% all the way to under 5.4% in only a couple of months. It was some pretty big falls. And what that really meant is that it was costing the banks less to borrow money and then lend it to you and me for our mortgages. And that's why a lot of banks had been discounting their interest rates in private. And I recently shared those numbers in my weekly One Roof column. But then what happened? Well, we got new data. And when the facts change, you change your forecast. And firstly, unemployment didn't go up as much as the Reserve Bank thought it would. Instead of increasing to 4.2% like they expected, it came in at 4%. And of course, more jobs, that's usually a good thing. But when the Reserve Bank is trying to get inflation down, they don't want people to have way more money that they can go and spend and push prices up. On top of that, over in the US, the Federal Reserve is warning investors not to be so optimistic about the Fed cutting their rates. So what happened? Well, the market got spooked. Look what happened to those wholesale interest rates. In a couple of days, they jumped from less than 5.4% all the way up to 5.7%. What does that mean? Well, it's now costing the banks more money to lend to you and me for our mortgages. So the jump in wholesale interest rates means that I have to take these old interest rate forecasts, tear them up, and write some new ones even before I release those ones. So what's going to happen to interest rates now? Will interest rates go up? Probably not. Remember those discounts I just talked about in my One Roof column? There is a big buffer between the interest rates that banks are advertising and what it actually costs them to lend you and me money. Most banks updated their 1 year interest rates back in October when the swap rates, the wholesale interest rates, were higher than what they are today. You see, back then the swap rates were about 5.8%, 5.9%. We're just under 5.7% when I'm recording this video today. And while banks have been slowly decreasing some of their interest rates, the cuts have been pretty minuscule. So they've got a lot of fat in there, and I don't think that rates will need to go up too much. But interest rates will stay higher than what I thought last week when I first recorded this video and didn't release it. And just before we get into my interest rate predictions, if you like learning about property in this really numbers-focused way, hit the subscribe button. We release new videos every Monday and Wednesday. Interest rates will come down. That's relatively certain. It's just a matter of when, and it's that when that keeps changing at the moment as new data keeps coming out. And there's a lot of debate about it in economist circles. We're pretty split. ANZ thinks that the Reserve Bank will lift interest rates, but BNZ, ASB, Kiwi Bank and independent economist Tony Alexander, they all think that the next move in the OCR will be downwards. So when will interest rates fall? Well, it all comes down to inflation, and inflation is falling. It was 7.2% a year ago. Today it sits at 4.7%, a fall of 2.5 percentage points. This matters because as long as inflation is high, interest rates will be high too. If inflation keeps on doing what it's doing, it could even get down to 2.2% by this time next year. That will be well inside the Reserve Bank's target band of 1 to 3%. And you might be thinking, oh, come on, Ed, is that really going to happen? Well, it could. You see, the average bank in New Zealand forecasts that inflation will be all the way down to 2.65% by the end of the year and could even be 2.5% by this time next year. We could even see inflation back within the Reserve Bank's target band by September this year. And there was new data out just the day before I hit record on this video showing that inflation expectations are falling and falling pretty quickly. That is going to make the Reserve Bank feel more comfortable about leaving the OCR where it is today. But just before I get into my interest rate forecasts, I know in the YouTube comment section, people will ask, well, what about domestic inflation? And that is a great question because while imported inflation is currently falling, domestic inflation has proved to be a wee bit more sticky. Two things to remember. Firstly, domestic inflation is usually higher than imported inflation. So the fact that domestic inflation is a bit higher right now, that's normal, not unusual. The second thing to remember is that imported inflation peaked sooner than domestic inflation. So imported inflation has been falling for a while. Domestic inflation, it hasn't had as much time to come down from its peak just yet. Now, when I look into my crystal ball and ask what will happen to interest rates over the next couple of years, the one-year interest rate is currently at about 7.3%, depending on which bank you look at. A year ahead, my best guess is that the one-year rate will be under 7%, but above 6.5%. So if I had to guess and put a number on it, I would say 6.7%, a fall of 0.6. After that, we'll likely see some of those big falls that ANZ was predicting only last week. So let's call it 5.5% by early 2026, then a gradual decline to my long-term interest rate assumption of 4.5%. And if you want to know why I have these assumptions, check out some of my earlier interest rate forecast videos. But a big disclaimer. These are just my best guesstimates. I expect them to be wrong. So if you're commenting in 2 years' time saying, ha, you were wrong, Ed. Well, exactly. I expect these to be wrong. This is based on the data we have today, and when new data comes out, of course, I update my forecasts. Now, if you're thinking about investing in property, you think, well, maybe today might be a good time to start thinking about it, head over to our website. We're opespartners.co.nz. We help regular Kiwis grow their wealth through new build investment properties.